Traders, welcome to the video. In this video, I'll be showing you a very quick strategy that you can use to scalp the boom and crash market and make money out of it. For this strategy, I'll be showing you how you can easily catch the spikes to the upside. This is the bull market, and also I'll give you a step-by-step guide on how you can easily catch the retracements. So this strategy is good for a small account, and also you can use it to trade any account of any size. So you just have to increase your lot size and apply good risk management. And if you look carefully on my chart, this is the 1 minute time frame. So this strategy is basically used for 1 minute time frame. We can catch the spikes and we can catch the retracement if you stick to the rules that I will be given in this video. So if you look carefully on my chart, I have series of indicator. Over here I have the Bollinger Bands and I have the moving average, which is this blue line. The Bollinger Bands is the red line, and then down here I have MACD and also moving average. Then here I have the stochastic oscillator level. So the Bollinger Bands and the moving average on my main chart, I use it for a perfect entry. While for down here, the moving average and the MACD, I use it to know exact point where market is likely to change trend. And here, if you look at my stochastic oscillator, you will see level 85 and level 15. So this area gives me the area where market is likely to change direction. So what are we looking for this strategy? For the retracement cashing, that is for our easy 5 candles. The zoom level for this is the level 2. Zoom in 2 times. 1, 2. So this is the best zoom level. So what we are looking for in this bull market, as we all know that we are selling to the downside, so we want to see the moving average and the MACD indicator enter into the 85 level, which acts as a resistance. So as you can see over here, we have a spike to the upside that pushes the MACD and the moving average into the 85 level of the stochastic. So the next thing we want to look for is the cross of the moving average below the Bollinger Bands. So if you look over here, this is the moving average, below moving average. We have a cross here. We enter our sell and count our 5 candles. We can also catch 10 candles. We see our market continues to the downside. But the most important thing is that I want to see this MACD and moving average enters the 85 level before we have this setup. So let me show you more examples on my chart. There is also a nice one over here. We have the spike, the moving average and the MACD go to the upside but did not enter the 85 level, and that is first condition, so it is not met. And if you look over here, the blue did not cross the Bollinger Bands, so this is second condition, it is not met, so we have no trade. Then we wait patiently until when this blue or this red enters into the 85 level. As you can see over here, we have the entry around this point. We have a spike to the upside, and we wait patiently for when this blue crosses the red. You enter a sell, count your 5 candles. You see our market delivers 10 also around this point. The reason why I stick to 5 is that 5 is more profitable than to be catching 10. Sometimes market will generate 8 and 9 and then spike to the upside, taking you in a drawdown. So for catching the spike, what you need to do is to zoom in to the maximum. This is the innermost zone. You want to wait for when market will go into the 15 level. So we see how retracement dips inside the 15 level around this point. After that, you want to see a spike, a single spike to the upside that will break the Bollinger Band and the moving average. So you see over here, we see market retrace into the 15 level. Then we have a spike to the upside that breaks the Bollinger Band and the moving average. You will enter a buy here. Immediately you see the spike, you put your stop loss below this low. Then you catch 2 or 3 spikes. So you see 1, 2. And you can also wait for this one. So once you have that, you close your trade. That is the way you can easily catch spike with this strategy. Market retrace again into this level. We wait for a spike to the upside. Also, you can see over here we have a spike that breaks the moving average and the Bollinger Bands. You enter your buy immediately. Stop loss will be below this low over here. Then you catch 2 or 3 spikes. 1, 2. So if you count this green over here, that is 3 spike. You exit the trade before you see market retrace down to your entry. So one thing I want you to know is that everything you are looking for here is opposite in the crash market. Let me show you one examples each. So for the retracement, you want to pay attention to the 15 level. You see our market spikes to the downside and enters into the 15 level over here, which acts as a support. You want to see market go above the Bollinger Bands and the moving average. You have it here. So you enter a buy and count your 5 candles, and after that you exit your trade. And for the spike, you want to see market retrace into the 85 level. If you look over here, you have the 85 level around this point. You want to see a spike down that breaks the Bollinger Bands and the moving average. This is a spike. breaks the Bollinger Band and the moving average, you enter your sell immediately. You put your stop loss above this high, then you cash 2 to 3 spikes. You see 1, 2, and third spike. You close your trade. You see that after the third spike, market retrace to the entry point. Now let me show you how you can increase your win rate for this strategy. So what you need to do is to go to your 1 hour time frame. So you want to do your analysis from the 1 hour time frame. As we all know that in the crash market, market spikes to the downside, and in the bull market, market spikes to the upside. So if you want to catch the retracement for the crash market, you want to ensure that the higher time frame is in an uptrend. So how do you know that? You want to see this moving average and the MACD enters into the 15 level. You want to see market goes above the Bollinger Bands and the moving average. So once you confirm that, then you drop to your 1 minute time frame and look for entry. So the entry for the retracement, because we are cashing the retracement over here. And for the spike, we want to see this moving average and the MACD enter into the 85 level. This is the crash market, because we want to cash the spike to the downside. So once you have that, you want to see market goes below the moving average and the Bollinger Band. So once you have that, you go to your 1 minute time frame and look for entry. Also opposite for the bull market. For the bull market, if you want to catch the spike, you want to pay attention to the 15 level, and then you want to see the market goes above the moving average and the Bollinger Bands. After that, you go to your 1 minute time frame and look for entry. While for the retracement, you wait for the moving average and the MACD to enter into the 85 level. If you look over here, you want to see the market goes below the Bollinger Bands and the moving average. So once you have that, you look for sell opportunity in the 1 minute time frame using the entry setups that I have given you. Let me show you settings to my indicator. First thing you do is to click on this indicator icon over here. So like I said, I have series of indicators. I have the moving average, Bollinger Band, stochastic oscillator, MACD, and the moving average. So to select this moving average, click on this F icon on the main chart, moving average. Make your period to be 10, shift to be 0, method to be Lillian weight, apply to weighted close, style, make it 3% and select color of your choice. After that, click on save. For the Bollinger Bands, click on this F icon on the main chart. This is Bollinger Bands. Click on that. Make your period to be 20, deviation to be 0.5, shift to be 0. Apply to previous indicator data. This is very important. Style, make it 3% and select color of your choice. After that, click on save. For the stochastic oscillator, click on this F icon on the main chart. Scroll down a bit. This is stochastic oscillator. Click on that. Make your K period, D period, and slowing to be 1. Price feed, make it low high. Method, simple. Main style and signal style, make it 1 pixel and select color of your background. If your background is black, select black. If it is white, select white. As you can see, I am selecting white. So the main thing we need over here is the levels. Click on this pen icon to add level. Click on this add. Type 15 and 85. Style, make it 2 pixel and select color of your choice. After that, click on save. For the MACD, click on the F icon on indicators Windows 1. Scroll down. This is MACD. Click on that. Make your fast EMA to be 12, slow EMA to be 26, MACD SMA to be 9. Apply to close. Main style, make it 1 pixel and select color of your background. Signal style, make it 3 pixel and select color of your choice. After that, click on save. And for the last indicator, which is the moving average, click on the F icon on the main chart. This is moving average. Make your period to be 1, shift to be 0, method to be simple. Apply to previous indicator data. This is also very, very important. Style, make it 1 pixel and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. After this, I want you to go back on your chart, backtest this strategy and demonstrate it in a live moving market. Test it for at least 2 to 3 weeks and determine your win rate. See how profitable you will be and make decision either to stick or not to stick to this strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.